Hi there. In this video, we're going to look at Ripple, and we're going to look at where the bulls and bears are fighting around, whether there are any bull traps, bear traps, and any kind of whales footprint through the Wyckoff lens. Let's start with the daily chart of Ripple. Here, immediately we see a potential bull trap happening right at this point that we are going through today. Here, last week, we talked about, or even previous weeks, we talked about we are going to get a confirmation, right? When we get closer and closer to the mid of May, there is a decision moment. Either the price break outside of this downtrend that started last summer, okay, very, very long time ago, around July, late July time. It is the moment the confirmation is going to come in. If it doesn't break the ceiling, which it is kind of struggling right now, it is going to come back to the downward channel and breaks the 1.35 T level. That's not the end of the world because it has happened before in late March, early April, and during February, it has tested that as well. And to me, if this is really a sideways trading zone, the lower boundary would be around the $1.2 level, okay? It's slightly lower than the 1.23, the orange key level. You see those two big candles, right, over there. It's fine, because I always mention these key levels are range. It doesn't mean that if a price is going to stop exactly at the decimal or the tenth of a decimal. Sometimes they go a little bit lower. What's more important for Ripple is that we don't want to see it to come to the blue key level of somewhere between the blue key level of 70 cents all the way to the purple key level of 86 cents, because that's where the October 10th tariff announcement date has come down to. Okay, that's the part that Ripple is quite different from a lot of altcoins. A lot of altcoins has come down to test the same level or has even gone lower. But for the case of Ripple, it hasn't. It stayed two key levels higher than that point, okay? The purple and the red 1.05. And if we look at the previous accumulation cycle, just 2004, the full year, it was actually around the 0.56 light blue key level. So it's not that Ripple cannot come down to this level. It's just that it is staying higher, similar to Bitcoin, somewhere at the middle of the mountain. Okay, it's not coming down to the valley. So back to the bull trap discussion we are just talking about. We have to check the fuel tank. Is the fuel tank healthy? It seems like it is not really, okay? It is coming down. It is, at best, just touching the average for the past month. Look at these volumes. These were way higher. So I also want to see it continue to trade outside of this downtrend. But right now, we're seeing the past 3 days, this line has been tested. Okay, 1 day out, the bears hit pretty hard. Sorry, I need to change it to this. Yeah, because these are education content only. I need to have the disclaimer. So here, bear hammered the price back close to the ceiling of the downtrend. The second day, immediately push back. The bulls and bears are basically like what's happening over here. They kept pushing and try to change the playing field, okay? If the bulls manage to let the price stays outside of this line for the next few days, okay? Even if the price continue to trade just above this, when we get closer to the mid of the month, and the price, if it really comes, the bulls really, suffers pressure from the bears, the price got pushed down closer to the 1.35 yellow key level. Then That's a real test. Okay? But don't worry, because that's only talking about a bigger trend. As long as it stays outside of this box, even if it drops below the yellow T level, we can still continue to measure, because the boundary, like I mentioned, is actually the 1.23 orange T level. So I see the thing, even if it's not turning upwards, the sideways zone is actually between 1.23 and 1.54. By then we can draw a box, or we can draw it actually now, that the sideways trend may be at play. Okay, we have been waiting for this confirmation for 3 months already. Remember I said the price has to come to this edge, go outside of it, and then confirm the downtrend is over, and that turns into a solid sideways trend. And this sideways trend, the upper bound and the lower bound, is somewhere between $1.2 to $1.55. So that's the play that's going on over here. Okay, we are at the transition point. So I'm just trying to take a pause and see if you want to measure this, but that's way beyond almost getting to the end of June. So I'll leave this line over here in case this upward momentum continues. Okay, and comes to test the 1.54. Okay, but my assumption is that we are going to see these kind of testing even below this yellow dash line, coming to this yellow solid line 1.35, because that's also what happened back in February-March period. Okay, so let's see what's going to happen, and next week we'll come back to look at this micro view again, and now we're going to move to the macro, the weekly view. With the Wyckoff lens, I talked about, we're potentially in a transition period from the distribution cycle of Wyckoff, the blue tags, into the accumulation cycle, the orange tags. Okay, this happened back in 2022. Now we are at the same crossroad. Here, a lot of times when the price drop to the transition zone, it takes a pause before the actual selling climax come up. All right, so it's a bit tricky sometimes if you call this too early and say this is the selling climax, because you see a long wick over here, it seems the whales have gone in, you see whales buy, right? And then the price isn't dropping any further down. And also the volume has been staying very, very low. Yes, those are signs. Sometimes it happens that way. But then, if you look at what happened over here, just want to enlarge it so you can see. Usually, with the long red candles and the long wick, where the whales might have gone in, the price tends to go a little bit further down, not too much. So you will find a lot of these examples if you go into the charts, across the board. Just verify and just trust what I say. Go check it out. We have seen this candle. We haven't yet seen a really clear drop lower than the wick. Okay, so that's still a possibility for that to happen, and that's potentially a panic overstation. That's also why in the beginning I said Ripple is staying a bit higher, quite a bit higher than the tariff announcement date. Okay, that's a bit of a worry for me seeing this. Okay, is it going to come down? Is it not? Okay, that's the thing that's still hovering in my mind. Best, of course, it comes up to show us a rally. Then it's a little bit more clear that Ripple may have started accumulation, and that's higher, much higher than the last accumulation cycle, which I said previously, given all the regulatory challenges and legal challenges are gone, that was haunting Ripple back then, the spirit. If it accumulate higher, those are the reasons. Of course, combined with the payment network development and the partnerships that it is getting, the business side seems to be staying healthy as well. So those are positive factors that may help support the base price of Ripple. But that doesn't mean it can never come down. Okay, so be cautious about this. So let's see how far it is going to get into accumulation and how long it is going to stay in the accumulation cycle. However, if you say, if this is not the accumulation cycle, even after all these bounces, what would it be? There's still a UT80 upwards of the distribution in Wyckoff in case Ripple really hasn't finished the distribution. Okay, if this is not the accumulation, but just like a dip before the final test, okay? That's still something that can explain the situation over here. If Ripple all of a sudden shot back up before it do the actual drop, okay, before it does the actual drop. I'm getting a little bit excited looking at this. Okay, so remember, you can find my work on Substack as well and as a lens. See you in the next video. Thank you.